in many ways, the commoditized markets and products, call it spot, even derivatives, will become more and more competitive, and the alpha will get squeezed out. But I do think that like DeFi is one area that a lot of these traditional firms still, I think, are hesitant to touch and get into, and will be an area of like alpha generation for some of the more like crypto native, participants, right? And we're already kind of seeing, a shift in volume, from centralized exchanges to decentralized exchanges for like hyper liquid, right? And, kind of like the large whale that's been kind of trading around the markets there over the past few days. I think that's illustrative of the direction that we're kind of heading.
Welcome to another episode of Derivatives Decoded. Today, I'm very excited to share a conversation with someone I believe is, one of the best traders out here in the crypto space. Someone that I've had the opportunity to work with and see sort of, do their magic since the beginning of Kemet. I'd like you to welcome Shiliang Tang with me. Hey, Shiliang. How are you doing?
Thanks for having me. Appreciate you bringing me on.
Beautiful. I'm glad that we get a chance to talk. There's a lot to really delve into today. And I think let's start off with giving you a chance to introduce yourself. Talk a little bit more about like sort of how did you get yourself into the digital asset space? What has been your journey? And walk us down the memory lane to this point today.
Yeah, I spent most of my career in traditional markets, right? Like vol trading, but more on the electronic vol trading, algorithmic HFT side of things. Obviously, when you're on a trading desk in traditional markets and you see, some random assets spike up 1,000% or more in a short span of time, you take notice, right? And this is, back in 2012, 2013. So dabbled a bit, trading my PA, nothing too serious, right? But in 2017, that was kind of the first, I would say, mainstream kind of retail bull market. I took a look at the markets, saw that infrastructure was getting built up, a ton of new products, exchanges, felt that I could bring a lot of traditional asset strategies to the space. And so, actually my, partner, first partner back then was Johannes, who's still my CTO currently. And we used to work on the electronic vol desk together, but, decided to launched Ledger Prime. At the time, that was part of Ledger Holdings, which is also owned Ledger X, which is CFTC-regulated derivatives exchange back in the day, the first CFTC-regulated derivatives exchange. And that was when we first professionally delved into, I would say, the space, right? Built that firm to a multi-strategy hedge fund, roughly 400 million AUM. Ultimately sold it. Fortunately, we sold it to FTX, so that was an unfortunate ending. Had to unwind it. But misfortune brings new opportunities, right? And so from there, I launched Arbelos Markets, right? A principal trading firm. This was beginning of 2023 with Josh Lim, who at the time had left Genesis, and he was running Genesis Derivatives previously. So that was kind of a brief history. Yeah.
So what has been like the common theme? I guess like obviously, as we go down this path, right? It seemed like you've always been in that seat of like an operator and a trader, right? Does that sound fair? Or were there any points in time where you were leaning one way or the other a little bit more?
Yeah, I think I always loved trading. I always loved the markets. Honestly, I probably don't have any other skills, but I did briefly catch kind of, I would say, in between pre-crypto professionally and post, TradFi markets. I started a fintech company briefly, like an insurtech company, and caught kind of the startup bug. And crypto being this kind of nascent field still in 2017, and saw this opportunity to be able to couple, trading and markets with an actual startup. And starting a trading firm, sure, you can, keep your head down on the desk 24/7, just trading markets. But the market was fast, right? Like cycles are, months at a time or 1 to 2 years at a time in crypto. And new instruments like DeFi didn't exist back in 2017, but in 2020, it was a huge opportunity. Derivatives exploded. So, as a business operator, sure, you can just watch the markets all day, but at the same time, you have to kind of grow the team and, seek new opportunities, right?
Absolutely. I mean, there's, like I said at the beginning, right? There's a lot that we could talk about here, and I'd love to dive a little bit deep into the operator side of your journey, and also a little bit deeper, right, into the trading side of your journey. But I think we're going to start with the operating side because, to be quite honest, and I'm one of those curious people also out there, being in the seat of a founder, not once but twice, and having a chance to kind of build a business in a still relatively like nascent space, like the digital assets, right? And then eventually being successful in selling such business. And I don't think there's a lot of trading firms that honestly can say that they've been able to build something within quite a short time and be able to sell it to a larger player also within a very short time span. So I'd love to kind of like walk through that journey, right? Like tell me more about one, I guess the nuances of starting a trading desk in the space, right? And you've done that twice, right? One with Ledger Prime, another with Arbelos, and I'm also very aware that obviously you're running still, right? Like another multi-strat fund, like MNNC, right? So it sounds like you've done it more than a couple of times, right? So walk me through how do you do that, right? What's necessary in a space that where quite traditionally, right, there hasn't been a playbook, right? Sure, you could draw some lessons from a previous life into building a trading operation, but obviously a lot of those still don't apply, right?
Right. I guess I can kind of start from the origins of Arbelos, right? We, Josh and I, honestly credit to Josh. Like we saw kind of an opportunity post Genesis, FTX, Three Arrows, the whole shebang in 2022.
But by the way, if you guys are watching us for the first time, like the first episode of this podcast was actually with Josh, so go back and watch that one if you want to learn more about the other duo.
Yeah, so saw basically a hole in the market, right? Like there was a need for, a lot of dealers blew up, right? Like Ledger Prime were pretty large in derivatives, Genesis obviously. So we saw a hole that needed to be filled post kind of the crisis world in crypto. We were clearly, between our networks previously, were a large part of the derivatives markets, right? And so, we saw that we could basically, relaunch extremely quickly, grab market share when there's still kind of chaos in the markets. And crypto, while it's a very kind of, decentralized, philosophy, I think ultimately a lot of it is very relationship based, right? It's kind of like, sometimes I almost describe it as like Wall Street, like the 80s, right? Like it's very relationship based, bilateral, a lot of like backroom dealings, despite kind of the transparency and everything, right? So we saw that we could kind of leverage our relationships there and build this new trading platform, trading desk that was about transparency first, and immediately kind of jumpstart the business, right? And so, we know how to trade. We saw opportunities. We knew we had to, book clients and book a business. Credit to, now our kind of new homes at Falcon X. They saw an opportunity to partner with us back then early on to be our kind of first like balance sheet providers and distribution partners, which really helped, bootstrapped our growth initially in the early days. Yeah, I think we were extremely successful in kind of hitting the ground running and launching very, very quickly, being kind of a dominant player on the, listed exchange markets as well as the OTC markets. And, here we are like, in the last year, we ultimately decided to sell Arbelos to Falcon X, right? And we already had a working relationship. We knew the team there. We saw that it was a bigger platform that we could really grow and, the business. And I think ultimately it boiled down to Josh and I's kind of vision and kind of conviction about where the market's going, which is ultimately there needs to be a lot of consolidation in the markets, right? That the space is, while it's grown a ton from 2017, 2021, it's still not very large, right? There's no need for, 10 dealers, 10 service providers, 10 data providers, 10 like everything, like this like very fragmented market in crypto. I think like ultimately it's going to consolidate, right? To kind of like the leaders that can kind of do, a variety of things, right? Similar to, I would say, how traditional markets and traditional products that service financial products and financial markets ultimately, went down that path, right? Which is just kind of a roll-up of different, business lines, right? And so I think we saw that we needed to head in that direction if we ultimately wanted to continue being a dominant force in the market and grabbing market share. And, Falcon X seemed like the right partner.
Were there like other offers that you guys were debating of going down
I
that
would say we've always been solicited, right? I think just being in the nature of the business is very small business, right? Small industry, and so we definitely got solicited from various firms that kind of saw the continued expansion of derivatives, right? Like derivatives in traditional markets, 5 to 10x the size of spot markets. In crypto, there's still a little bit of way to grow to get to that size, right? I think we will get to that size. So I think, the spot markets have been pretty saturated. Derivatives kind of the next frontier for a lot of firms, and they saw the need to, grow in that area. And obviously, they don't, growing from scratch takes a long time. If you can acquire another firm or another desk, you can kind of jumpstart that, right? So we definitely got offers, but ultimately, we felt like we need to partner with a leader in the space, right? And we kind of felt that like a prime broker that it already had existing book of business and spot, the technology to distribute that and make, there's a ton of like back office that goes into running a derivatives desk, right?
Yeah.
Like, it's not just like, we print something and there's just like bilateral agreements to be negotiated, settlements, managing collateral, variation margin, et cetera. It's a huge like undertaking, not to even mention like the regulatory picture.
So
right?
there's a lot of like tedious, unsexy stuff to get to that
And
point
so,
of executing,
like, you really need like that infrastructure already in place to, actually like be able to take advantage of what the market gives you. And there's not many players out there, at the time and even now that could like service that, right?
So where do you see the future from this point forward, I guess? Like now that you guys have obviously closed the deal like earlier this year, right? And officially you're now sort of part of Falcon X. Like what is the plan for 2025? And how have you guys seen sort of things shift since you finalized like a deal and now part of a much larger shop?
Yeah. I mean, I won't speak for the firm, but I think in general, there were a lot of opportunities that even Falcon X wanted to take advantage of, right? Not just like simply in derivatives. Like now it's a kind of a leader in the derivatives market, but previously like Falcon X didn't really touch much DeFi, right? And now it's developing the framework to do so, and I think there's going to be more opportunities just within like the decentralized space, right? And I say that because since the Trump presidency, I think we're entering the space of, call it, regulated crypto. In some ways it's deregulation, but it's more, I would say, regulatory clarity. And I think with regulatory clarity, there's a lot of positives that have been unleashed, investment and just the ability to navigate more freely in the space. But I do think it also brings more competition, right? Like ultimately, traditional firms that have been, sidelined by regulation, et cetera, now see this opportunity to potentially, enter the space, quite aggressively, right? We're seeing headlines already from Citadel and others that are, getting back into the space. And so I do think that like, in many ways, that the commoditized markets and products, call it spot, even derivatives, will become more and more competitive and the alpha will get squeezed out. But I do think that like DeFi is one area that a lot of these traditional firms still, I think, are hesitant to touch and get into, and will be an area of like alpha generation for some of the more like crypto native, participants, right? And we're already kind of seeing, a shift in volume, from centralized exchanges to decentralized exchanges for like hyperliquid, right? And, kind of like the large whale that's been kind of trading around the markets there over the past few days. I think that's illustrative of the direction that we're kind of heading. And then separately, I do think that like we're all in this space because we believe that a lot of assets in traditional rails ultimately will come onto, call it like the digital rails, right? Like anything that can be digitized probably will become, right? Not like fully. I think there'll be, meet in the middle in some ways, but I do think like traditional like FX or equities or credit, et cetera, parts of that will go on chain. And so I think as a crypto native firm, you also have to think about that next, iteration of the markets, right? Like I think like staying crypto native, trading the next altcoin, trading the next like layer one, it's not, I would say, big enough ultimately to sustain like, a ton of like crypto trading firms and businesses, et cetera, right? I think like ultimately the end goal is once all these different assets get, actually come on chain, crypto firms have to decide like, can they actually compete and, and trade on some of these digital assets in some ways, right? And I think like that's also a decision that firms like a FalconX and others will have to make, right? I think like if you're a leader in crypto spot, crypto derivatives, et cetera, fine. Like you can probably, survive like the test of time and be the leader. But everyone else, I think, needs to either get rolled up or merge or actually expand their kind of like product offerings and like what they touch.
So you're a firm believer that almost all trading activity at some point in time from
I mean, I don't think it'll necessarily go
fully
like
on chain.
Fully on chain, but I do think that we will see an emergence of traditional assets that are traded on chain or in crypto native kind of infrastructure, right?
Yeah.
Like I do think like the crypto native PBs should, and the successful ones will compete on that, right? Like they'll be able to cross collateralize, equities with Bitcoin, and we're already starting to see a bit of that, right?
So I want to stop you right there because I mean, obviously, like, and I've had every single guest that have come on this like podcast, like we've had the same discussion, right?
Yeah.
You mentioned crypto PBs, right? So, do you believe that we do have what is traditionally known as a prime broker within the space today? Like, fledged
right,
prime broker? I don't have a little bit of time to get.
Yeah, I think definitely still like a little bit of time, right? I think like the term prime broker is like used very loosely in crypto, right? It's definitely not the same as like a traditional like prime broker.
So what's missing, Shiliang? Like, what do we need for the existing players that are the closest to kind of get to that point?
Yeah. I mean, I think part of it is, one big part of it is credit, right? I do think that like credit since the, implosions of 2022 has been missing in large parts of credit. It hasn't like fully come back, right? For better or worse, right? Like I think 2022 was a little bit loose in terms of uncollateralized like credit and lending and lending standards, right? But now like I would say most of credit's like pretty fully collateralized, right? For better or worse. And I do think that like to actually run a more like traditional prime broker, there needs to be some form of large scale of credit that needs to kind of backstop the space, right? And
a little bit loose on the collateral requirements, right?
Right, and that credit needs to find a home with very experts in like risk managers, right? And those that can actually like safeguard that credit well. On the like traditional
we went from like crazy times of like no collateral required, like just Wild West to full on, right? Effectively a complete lack of capital efficiency down to the like, so there's probably a sweet spot somewhere in the middle, but then to get to that sweet spot, it's not just about a balance sheet, right? It's not just about having a credit facility that can just sort of roll
of course,
out money, but a big part of it is also the domain knowledge, the talent, right? The existing infrastructure that can actually support this kind of scale. And obviously on the other end, right, there needs to be enough demand to justify that kind of scale. But if we both do agree that this space is obviously going to continue to grow, right, with everything that we're looking at these days, part of my next question is you mentioned consolidation, right? A lot of the fragmentation in the space is across the entire stack, right? Like, data providers, tech providers, dealers, brokers, right? Like desks, whatever it is, name it. There's a bunch that are doing, something very well, but, not everything very well. Right. And probably it would be better to kind of all of them to get consolidated. But then when you go at that, if it even makes sense to use that metaphor, but like the top of the stack, right, which is the PB, the balance sheet that everyone's like sort of tapping into to trade efficiently. If I had to argue, there's like maybe like 4 or 5 big firms. Obviously one of them is where you are today, but again, none of them, as we've both agreed, are truly at a scale of a Goldman, right?
Sure.
Or any of the existing like TradFi. Do you see a future, very nearby, where those very large, eons old TradFi PBs come in and effectively consolidate whoever is trying to fill that space within crypto?
Yeah, I mean, I think in some ways, right? Like, I don't think like, I wouldn't expect like a traditional PB to come in and, roll up 100% of all the existing like trading firms and PBs and then just call it a day, right? And that's like what the leader, I think like you look through time in history, like it's been a mix of two, right? Like obviously incumbents come in to a certain extent, but in many ways, it's kind of the new emerging firms that do take like a dominant foothold. Now, not every single one of them will, but I would bet that at least like 1 or 2 will be able to maintain their foothold and then expand kind of reverse back into like traditional assets in some ways, right? And kind of like meld the best of both worlds, right? Because I think it will be very difficult in a short span of time to expect a traditional PB, for example, to integrate like, DeFi, for example, right? And like, get kind of the regulatory comfort, but also just the expertise to be able to integrate like, 15 different chains and 50 different platforms and all these like decentralized exchange. And I don't think they really want to either, right? Like it's probably a waste of time. It's such a small market for them.
Yeah.
And so I do think like there is an opportunity for incumbents that do see the opportunity here and can build that infrastructure to be like the partners for like these larger firms, right? And ultimately, whether that results in a full-on acquisition or merger or kind of just like a large investment, to be determined, right? But I do think like that's probably the better direction. Yeah.
Makes sense. All right. Before I wrap up, part of your entrepreneurial side of things, I guess my last question here is maybe you can share some wisdom on navigating an acquisition altogether. I think this is, as you're very aware, right? M&A activity altogether within the space is far and few in between. And we're seeing a lot of that maybe changing recently, but I'm glad that we have you here to tell us a little bit more sort of like how did you and Josh navigate that discussion, even with a close relationship, obviously with Falcon, but I think a lot of us can maybe learn a little bit more of, how did it start? What were some of the obstacles or issues that you might have like sort of had to, maneuver, and how did you land the plane?
Yeah, great question. I think there needs to be a lot of trust, like initially from both sides, right? I think you kind of have to, for any successful deal, you kind of have to come to negotiating table first with the assumption that the other side's at least, operating and willing to meet you kind of halfway and operating in a
good faith.
Exactly.
Yeah. They're coming in with like,
right. They're not trying
we want to make
like,
this happen.
Yeah.
They're not trying to just.
And then, sometimes there are going to be others that are coming maliciously or trying to waste time. But I think like we had a good working relationship. There's been over a year, built up of trust. I previously known the Falcon X team for a very long time. I'm an investor. Yeah. So like I've known them for a long, and so like I think both sides at least knew the end state. It was more about navigating like how do we, actually get there, right? And sure, like actually getting there, like between lawyers and due diligence, like it was extremely, prolonged and painful. Like, there's no way around it, right? Ultimately, it's important to just always keep kind of like the eye on the price and like the ultimate vision of what the end state looks like. And I think that was like the driving force, right? We saw kind of this like huge opportunity that we needed to move really quickly to grab. And that kept everyone excited on both sides so that the daily minutia of just like, more calls and more due diligence requests, et cetera, like you can actually, stomach those kind of
like gotchas.
Yeah. Like the daily like wear and tears. Yeah. So I think like that's extremely important. So I think like just being, very positive about things and making sure that like when you come on the other side, like the goal wasn't for us to just like cash out, right? Like I think the goal is like we want to continue building. Now, what is the end state look like for us, post acquisition, for us to maximize our upside, but at the same time be happy about the situation that we're in, so that we together can maximize, this business and this industry, right? So
makes a lot of sense. Let's talk a little bit more about your trading, like, career altogether, because I think that's a big part of who you are today. I want to understand from your point of view, sort of what have changed since your days at like, Ledger Prime and even before, and, going through with Arbelos and now, obviously with your new role at Falcon, with your focus on MNNC, like from an operational perspective. And I know you've been, very much focused on the operational side as well as obviously coming up with like the trading strategies. Like what is now better? What works much better than before? And obviously I know like on the technology side that continues to be quite a struggle, right? Not as much as it used to be, but it's still not anywhere near the maturity level that I guess a lot of us are really hoping for. Yeah. So maybe walk me down that lane. And I know like at some point, obviously you guys have been leveraging a lot of the technology providers out there, right? Including Kemet.
Yep.
What's actually working and what's not?
Back in 2017, there weren't many providers, right? I think like if you wanted to like do something, you kind of had to build everything from scratch, and like even build it from scratch, you don't really know what exactly you were building towards, right? And some things were just out of your hand. So I would say like getting from 0 to 1 in crypto now is a lot faster and a lot easier because you can actually like focus on what matters, right? And you can kind of, outsource or, sign up or pay for like the other aspects of the business that ultimately isn't core to like what you're focused on anyway, at least for a trading firm, right? And so we can delegate a lot of the execution to Kemet, let's say, and data to, other, service providers, and really just focus on actually like alpha generation and trading and, clients and whatnot, right? And so that is way better and makes everyone's lives way easier, right? But with that also brings just a ton more competition, right? I think like the edge in markets now, and I've been through a few cycles, I would say continues to get squeezed out, at least from a quantitative markets and trading perspective, right? Like 2017 versus now, even like DeFi 2020 versus now, or even derivatives, 2022 versus now, right? Just a lot more competition. Even though the market's grown, right, in size, I think competition has grown in some ways faster than the speed of how the market has grown.
I mean, in the grand scheme of things, that's actually a very good thing, right? Like that's just telling you that people are becoming a lot more serious about how they're interacting, getting more players coming in, right? It is a sign of maturity, but obviously it does make your job harder, right? Over time.
Yeah, exactly.
And then at some point, it's like, you need to be at the top of the stack, otherwise you're effectively dealing with decaying alpha every single day.
Yeah.
With that being said, like from your perspective, that is truly unique, like as someone that's been in this space for quite some time, like where do you fall on the buy versus build spectrum? Not just for technology, but like, across the whole stack, right? It's there's your tech, there's your middle office, there's a lot of like, effectively just service providers, not technology providers that also you can rely on. And then how far down that stack will you, sort of skew one way or the other, the buy versus build? If you were to start Arbelos tomorrow, what would you do different?
Yeah, I think there's certain things that you obviously want to retain, in-house, right? I think like you kind of have to think about, if you're a trading firm, obviously strategies, research, models, pricing, like those are core and fundamental to your business and probably how you differentiate from your competitors, right? You kind of have to bucket into like, what are the areas that are a commodity that, ultimately everyone kind of will get to and probably doesn't accrue additional like equity value or edge to your business versus like what actually will separate you from your competitors. So like for Arbelos, I think obviously like back office operations, some data, some execution, we're willing to like outsource, right? I think, those areas, the market has sufficiently become standardized enough where everyone's kind of building towards that anyway. And, people get there in different speeds, but like the end state roughly looks the same. And we felt comfortable to be able to outsource that to other service providers, right? But then there were other areas that we felt we had an expertise and we're leaders in. And so that's where we wanted to differentiate and keep in-house, right? I think that's like the modeling aspects like vol, surface modeling, pricing altcoins, especially how we kind of like, service like clients, how we research the market. I think those are kind of more subjective in nature, right? And comes with years of experience, but also just the team, right? I think like, we're tremendously proud of what our CTO Sergio and others have built. I think that was like a large part of our edge versus like some of our competitors and everything from our ability to price things, but also just move like extremely quickly in terms of building up like our PMS and pricing models and everything else.
That makes a lot of sense. All right. I want to switch a little bit more to, I guess, also just get your thoughts on where opportunity lies ahead, right? I do get a lot of these questions, but I think there's, very few people that have the insight that you kind of have today with everything that you've done so far. So, I mean, if you're an institutional investor coming into the space, where is the opportunity, right? What would you argue to be the best sort of area to focus on, right? There's a lot of hype around like, obviously derivatives, stable coins, asset management, right? Staking, all these sort of different, verticals. But quite frankly, for a lot of the institutional investing like crowd, there's still quite a mystery around, all right, what makes sense, what's actually there, and what matches my time horizon in terms of what I'm looking for from an ROI perspective.
And in some ways, maybe, I'm talking by book a little bit, but like, I do think that the liquid markets presents, I guess, top down, I think one is liquid markets in general, I think present a lot more opportunity than call it like venture markets, a few years ago, right? I think like you're getting and seeing a lot of projects that have come to market that have liquid tokens that are trading at valuations that are, comparable to very early stage, seed private, valuations, right? And some of them already have working products. And so I do think that you can kind of get the liquidity premium at like, discounted prices currently in the current state of markets, right? In liquid markets. And I think there needs to be more liquid funds in the space also for the industry to grow, whether those liquid funds are more beta and passive in nature or more active, alpha driven. I think for the industry as a whole to grow and kind of move away from this kind of model of, call it venture investments and then a token launch and then just gets, dumped on retail, there needs to be, actual latent demand into many of these, projects and in ecosystems, right? So I think that's one area where there actually is a lot of opportunity. And you can take it both ways. It doesn't have to be just a long buy and hold fund, right? I think like there's sufficient liquidity, sufficient assets and products in derivatives and perps to trade the market both ways, right? So I think you'll start to see emerging more traditional fund strategies of like almost like long short equities in some ways, right? Where you can kind of, participate in the upside, but also protect on the downside, and then compounding that in a growing asset class. I think that ultimately will reward like investors, right? So, that's more of a top-down approach. And then I think the second piece that I want to talk about is, my journey kind of running Ledger Prime, Arbelos, MNNC, and various liquid funds and trading firms is kind of like the progression of like technology and what we've seen as being needed and also being, built in the space, right? I think like initially when we started Ledger Prime, everything completely, built in-house, execution systems, data collection, extremely tedious. It broke all the time. Like, we needed 1, 2, 3 engineers just like maintaining all this like data connectivity, exchange connectivity. It wasn't, a great use, of our time, right? And I think like that does hinder a lot of like institutional comfort and institutional like participation into like the digital asset space, right? Because for an LP or allocator or equity investor to allocate and get comfortable into investing like a trading firm, like they're also evaluating obviously the talent and alpha, et cetera, but also like the safeguards and rails and what actually exists like already, in the space, right? Like a lot of them aren't going to like participate until at least a bare bones like infrastructure actually exists. And yeah, you can be the leader, you can be the one that builds it, but like you're going to be kind of, a one-on-one in the space that isn't like growing much, right? And so ultimately, like as we saw, data providers like Amber Data, execution providers like Kemet, prime brokers like Hidden Row, Falcon X coming to the space, that brought in like a lot more, I would say, institutional capital because they became a lot more comfortable with like the infrastructure that exists and enables trading firms and funds like us to ultimately grow, right? Like, I mean, you've run Kemet for a long time, like what goes into like maintaining like, on a full-time basis, like imagine like a trading firm needing to do that separately from also just, research and technology and everything else, right? It's basically like operating like an internal business just to maintain like that execution layer, which ultimately probably like, yes, is extremely important, but like there's no need to...
It's not the core of the business.
Yeah,
you
don't need to repeat that across 50 different trading firms in the space. It's just not a good use for the progression ultimately of, the space as a whole, right? And, if you're like an institutional allocator looking in and you're just seeing this like very extremely like fragmented, everyone's kind of doing the same thing, like it becomes kind of like a clown show, right? Like it doesn't make any sense. So I think you needed infrastructure providers initially to come in and standardize many aspects of the business so that like firms can go and achieve that 0-1 moment extremely quickly and continue to add like liquidity and markets to the whole industry to collectively grow it, right? So I think that was like an extremely important progression that I've seen, in the space and continue, to see it, right? I think like DeFi now in many ways is what kind of crypto centralized markets were in 2018, 2019, 2020, right? I think they're extremely fragmented, like different chains, like collateral management and capital is like very fragmented and not very efficient, and not a lot of tools to interact with that easily, right? I think that is hindering like institutional participation in the space as well, right? And so now we're starting to see firms pop up to actually service that, right? Whether it's like August or others, building like the institutional infrastructure that's needed to get trading firms comfortable and institutional allocators comfortable, so that they will allow like the funds and trading firms that they invest in to actually participate in DeFi, right? And I think ultimately I think also just to get regulators even comfortable, right? Like to be able to monitor these markets, like the infrastructure there needs to exist as well, right? So
agreed. I want to wrap up with I guess one final thought from your point of view. It's like, how long is this pain going to last? A lot of people have been talking about like the past month. Right?
The markets.
Sure. So like, I mean, macro is obviously still not looking good whatsoever. Yeah. But are we done with what people were assuming is a bull market, or like what's going on here?
I think like the whole 4-year market cycle, I think over time will disappear, right? I think like it's not going to be as clear, especially as institutional capital comes into the space. And like it doesn't, institutional cycles don't operate in like 4-year like cycles, right?
Yeah.
And so in many ways, like the crypto trade and crypto markets has been, linked to macro hit by hit, not only like this year, but since 2020, 2021, right? Like I think the large injection of capital that we've seen globally, injection of liquidity has been a huge tailwind for crypto markets, mostly for the past, I would say 4 years, right? 2022 was the opposite. And this year we're seeing, the exact same thing in kind of the Trump administration and macro, and wanting to force, at least initially at the beginning of the term, a correction in markets, right? In many ways, to fulfill like their larger kind of, agenda, right? And so until I think like Nascent and, Trump and others are willing to pull back a bit, I don't really see crypto markets improving, right? I think like...
I mean, not improving in the short term, or?
Yeah, I would say...
What are we talking about? What's the timeline here?
I would say at least, until Q3 or Q4.
Okay.
Even Scott Bessent today said that like, you can't question out a recession, right? And, not necessarily looking at equity markets. Like, I mean, S&P's only, I think, peak to trial like in the past few weeks was only down like 10%, right? That's not, I mean, it's a lot, but it's not really a lot, right? I think the sweet spot they want to get to potentially is 15, 20%, right? And actually kind of borderline that recession, metric, right?
Kind of like a circle around a reset button.
Yeah, exactly. I mean, you want to do it now and quickly, as opposed to closest to midterms or prolonged over, several months and years, right?
But that's where the finesse is going to be needed, right?
Yeah.
You just want to touch on a recession really quick, but not too hard to push it into a stagflation, right? Because then things are going to get much, much worse.
Yep, exactly. And so, I do think like the second half of the year, if they're able to engineer this kind of soft recession, soft landing.
There's no more landing at this land the soft recession. Yeah. That's the kind of what we're going at. Yeah.
The Fed ultimately caves and lowers rates or injects more capital. I think crypto will come roaring back, right? It led kind of the fall in markets, and I think it will lead kind of the beta-driven bounce in markets as well, right? So, it's not over, but I do think that, for the next continue, and it's been 3 months already, but for another 3 to 6 months, it could be, still pretty
choppy,
lackluster and choppy in markets.
Where's our absolute like support? Like, where do we go from here? Like, are we gonna see 60s before?
I wouldn't be surprised. I wouldn't be surprised. You kind of have to think like, where is the demand gonna come from, right?
Yeah. I think retail is kind of cooled off,
exactly.
With all the memes.
It's reflective on the other side, like on the other way, on the way down too, right? Extremely reflexive on the way up, and same on the way down, right? And I think Sarah's done a great job of supporting the market, but even in some ways, like he's kind of running potential out of ammo, right? And there's going to be nation states, there's going to be the government. Those do take time, right? Ultimately, I'm extremely bullish of Bitcoin and the markets. But I do think in the next, 3 to 6 months, there could be a dearth of buyers. Yeah.
Makes sense. Shiliang, this was awesome. I wish we could continue on for another couple of hours, but I know you got to go. Thanks again for being part of this, and thank you guys. See you on the next episode.
Yeah, really appreciate it. Thanks.
All right,
take care.